Okay, so gold and silver just took an absolute nosedive, and you're probably caught in the middle of a really confusing puzzle. See, on one side, you've got this chorus of experts all telling you, don't panic. But on the other, a billionaire just made a massive, and I mean massive, bet that the worst is yet to come. So what's really going on here? Who should you be listening to? Well, let's break it down.
Yeah, this is where it gets kind of messy, right? The message being blasted out to retail investors, to people like us, is pretty simple. Hold on, buy the dip, it's a fire sale. But at the exact same time, a tier 1 player, we're talking someone with immense capital and influence, has just bet $300 million that silver is going to fall even further. It's a huge contradiction staring us right in the face. So who's right, and what move should you even think about making?
All right, so to really understand what this billionaire is thinking, we first have to look at the official story. The reasons that everyone is giving for the crash in the first place. Let's quickly run through them. So here are the 5 main triggers we're being told about. First, prices had just soared so high so fast that a correction was pretty much guaranteed. It was inevitable. Second, margin requirements went up, and that always squeezes out the smaller traders, forcing them to sell. Third, you had tons of people taking profits after those record highs, which just floods the market with supply. Fourth, a stronger US dollar makes gold and silver more expensive for other countries, which pushes their prices down. And finally, the silver premiums over in China completely collapsed, and that sent a shockwave of panic selling across the globe. Okay, so those are the official reasons. And you know what? They all seem pretty plausible. But, and this is a huge but, here's the twist. While all the experts are telling you it's time to buy, one of the biggest sharks in the entire game is doing the exact opposite. Just let this number sink in for a second. $300 million. This is not just some small hedge. It's not a guess. This is a massive, deliberate, high-conviction bet placed against the market. A move of this size is a giant flashing signal that somebody with immense resources believes the official story, well, it isn't the whole story. And this is what makes this move so incredibly interesting. This isn't just some random guy. This is the same billionaire who made billions betting on silver all the way up until August 2025. He rode that wave perfectly to the top, but then in January 2026, he completely pivoted. He started betting against silver, and now he holds the largest short position in the entire market. This isn't a guess. It's a calculated reversal from someone who knows this market inside and out.
So this brings us to the most important question of all. Why? Why would someone who knows how to make billions from silver suddenly bet against it, especially when all the public advice is screaming buy? Well, the answer lies in a hidden advantage that separates the big players from the rest of us.
So what's the secret? We're about to pull back the curtain and uncover the core concept that explains this whole situation. It's something that happens in every single market, but it is rarely this easy to actually see in action. The secret is a concept called asymmetric information. It sounds a little academic, but it's a simple and incredibly powerful idea. One side knows more than the other. And this isn't just about getting news a few seconds faster. We're talking about having better, more complete information, which creates a massive, massive imbalance of power in any transaction. Now, this is where it gets really powerful. Tier 1 players don't just get information early, they have the kind of capital and influence that lets them actually nudge the market to favor their own positions. See, they're not just playing the game, in a way, they're helping to write the rules as they go. And this is exactly how that information imbalance plays out in the real world. First, the smart money, our billionaire, takes their position, in this case, shorting silver. Then, by the time we hear the advice to buy the dip, they are the very people on the other side of that trade selling it to us. Then, when the price falls even further and we all panic sell at the bottom, guess who's right there, waiting patiently to buy it all back from us at a huge discount. It's a brutal but very predictable cycle. So how do you protect yourself in a game that feels, well, rigged? Understanding this cycle is the absolute first step. Now, let's turn this knowledge into an actual, actionable strategy. Okay, here's your action plan. First, and this is the most important thing, do not use over-leverage. That is how small traders get completely wiped out. Second, resist that urge to panic buy. A billionaire shorting the market to the tune of $300 million is a very strong signal that prices could fall further. The smartest move right now? Wait, observe. Watch what the big players are doing, not what the experts are saying. This whole situation, really, it reveals a fundamental truth about the market itself. And honestly, it might be the most important lesson you can take away from any of this. So here's the bottom line. The market isn't fair, and you have to accept that you will never have the same information as the big players. But you don't need to. Your edge isn't in trying to know what they know. It's in watching what they do. Their actions are out there in the open if you know how to look. So the real question is, now that you can see their moves, how will you play the game differently?